Welcome to another stage analysis video. It's Wednesday the 14th of February 2024. Going to do a midweek video on some of the earnings movers this week. There's been a lot of significant bars this week, a lot of volatility in the market, still in the midst of earnings season. So we'll see which stocks are making stage 2 breakouts and continuation moves on their earnings results. There's been a fair few this week actually, and there was quite a few last week as well. So it's been a volatile time in the market, but still see many stocks breaking out to new 52-week highs on their earnings results. So I thought we'd do a little focus video, just a brief video, maybe 20-30 minutes or so, on some of this week's earnings results. So starting off, we're going to have a look at App, which is App Loving, which has been moving tonight on earnings. So you can see it's pushing out with a continuation break. It made a continuation break a few weeks back now, but starting to push up into the 54 area in the after hours. Let's just double check this on the 195 minute chart on the extended, see if it's still hanging in there. So yeah, 53, 54, 53, 60 at the moment. So if we take that back to the weekly chart, you can see the whole life cycle of this one since it IPO'd back in mid-2021. So had that initial IPO base structure, started to break out for 4 weeks or so and rolled over, then had another little IPO advance before topping out at the end of 2021, rolling over and starting to break down into stage 4 decline here, stage 4 breakout roughly around this area here. You'd need to drop into the daily charts to refine that a little bit more, but around this area here, and then the initial backup move rolling under. You can see it was an extreme stage 4 decline, very small stage 1 base in the end. We had that initial change of behavior, then started to build a base structure and started to move into stage 1 around this area here. So very brief base and gapped up on earnings into stage 2. If we quickly look at a daily chart of this, you can see that stage 2 breakout. You see on the weekly here, it had this big volume on that gap up move there. I believe it was an earnings move back in May. So if we take this back, select the start date, drain it back a little bit, you should be able to see that a little bit better. So this is what it looked like as it was breaking out back then. So if we look at that there, you can see the initial pivot broken through. We still had a strongly declining 200-day moving average after that extreme stage 4 decline. So this was a difficult one in terms of small base, big decline, still overhead resistance to deal with, but significant volume on this gap up move. See it started to push higher immediately, so sign of strength in the near term, and then once it started to pull back, it held on the pullback before pushing out again. So at this point here, where it starts to go back above its 21-day moving average, is where it would start to get interesting again on what we call the backup entry point in the method. You can see if you look at this on an intraday time frame, you imagine this is a big stage 2 move on an intraday, rolling over into stage 3, and then a brief stage 4 starting to build a base here and then starting to turn around. You can see it then has that little breakout. So if you drop down to lower time frames, that would look like a stage 2 breakout on an intraday time frame. So holding the earnings move up here on the pullback, recovering its 21-day moving average, still above a rising 50-day. The moving average is getting into sync, so starting to look more interesting around that point, which was around here. So as I said, difficult one on this one as it started to move out, because V bottoms are more difficult to get into because people expect them to consolidate and pull back. So it was a very strong move initially, and you can see off the ultimate low here, actually moved up 385% for the first major swing there, and then consolidated for 22 weeks, I think it was. So 22 weeks, so what, 5 months or so before now starting to make this continuation breakout. So looking for this, with this move now, to continue up and push up towards the $100 level. It's up in the zone where it topped out in 2021 for a test of the highs potentially, with this stage 2 starting to get underway again, as the 5-month base should potentially have good momentum for this to start pushing out. If we look at another one that's moving today, we've got JFrog, so FROG. So you can see in the after hours here, continuation to a new 52-week high on earnings. I'll spread this out a little bit. Let's take it out to 3 years and 6 months on a bigger chart. 1 second. Let's make it a little bit bigger here so you can see the more of the life cycle that this one's had. So again, initial IPO advance, didn't make much progress, and then made a big stage 4 decline, starting to build a base structure since the middle of 2022. So had that initial change of behavior, change of character, then started to build a base in stage 1. So moved into early stage 1, started to chop around above and below the 30-week moving average. So you can see we can draw the broader structure through here, and the lower structure through this area here. Had that initial move, a bit of spring type action through this area, little double bottom, then started to push back out again. So this is what we call the phase D area in the structure, attempting to then move out into early stage 2, but this one failed initially and made a new stage 2 breakout attempt back in November again, and since managed to push higher, and now making a further continuation on earnings today. So let's look at this on a daily chart briefly, just zoom in a little bit. So what was on the after hours there? So up into the 42 area there. So it has gapped up and off the chart here. So a bit extended in the short term with the after hours move here. As we get the free ATR candles up here, then we can see 40.63 on the +3. So it's going to be above its +3 times ATR, which once it gets above that level, it's in a short term extended position. So, but continuing higher in stage 2, so another interesting one, and a strong theme with this group of GitLab and GitHub, and the others in this. GitHub is owned by Microsoft, so part of Microsoft if you're looking for that. Another interesting one is INFA, so moving in the after hours here. Let's just double check it still is. So what we're up to there in about the 35 level, just extended hours, see if it's still going. So it's still around 35.49 at the moment here in the after hours. So I did highlight this chart a while back when it was breaking out into stage 2, and it started to, I think I talked, it was already marked up to around this area. So I think it was back in October, November time when I did one of the last videos where I talked about this one. It's been in the watch list multiple times throughout the course of last year as it started to move out and then move into early stage 2 and continuing to push higher. You can see it's now pushed above the IPO week low. So I like to highlight that. You can use the IPO week close, the high, the low. I like to look at the IPO week low or the pivot low that forms immediately if it drops down for a few weeks and then starts to move back up again, as I feel that's a significant level, and you get a bit of a change of character from it starting to get out of the institutional due diligence phase and starting to move into a proper stage 2 advance. So you can see here, this is one where it was a great example of how the Wyckoff base structures and stage analysis sort of intersect, as you can be in stage 4 and still start building the base structure. So all base structures that eventually become stage 1 start while the stock is still in stage 4. So for example here, you've got the selling climax, the automatic reaction, the secondary test. This is the start, this phase A of the base structure. You can see there's a change of behavior, then that turns into a change of character once it makes that secondary test and then starts to build the base. So you can start to draw your base structure from the selling climax to the automatic reaction across, and then that becomes your initial area in order to look at. So I've highlighted that with that red box here, but you can see the stage 2 breakout can occur within that. So we've got stage 4, we've got stage 1, and we've got stage 2 all within that broader structure, which is the Wyckoff structure there. So you can see upthrust action here. We had a terminal shakeout here that then turned into a spring. So phase C into phase D, breaking out into stage 2, and then that sign of strength. So when you're looking at base structures and you're starting to consider how the stock is moving, it can go through multiple stages during that structure. So you just got to be aware of that, as it's not necessarily people will draw a box across and be like, that's stage 1, but the stock will still be in stage 4 and only just starting to develop, or it might have already broken out into stage 2, as was the case with this one, as it's you can see the moving averages have dropped much lower down here, and the 200-day got under this area, and then it started to break out through this. So this was your stage 2 breakout, but this was still in this broader zone of resistance, this broader structure. So you can see now this is now up into what we call the turbulence zone, which comes from the life cycle trade. So you had the IPO advanced phase through here. So this area through here roughly is what they consider the turbulence zone. They would expect it to get a little bit more choppy through this area. So I think there's some recent examples you can have a look at for something like this. Maybe IoT is probably a good one for that. You can see so your turbulent zone, this is the turbulent zone through here, initial IPO advanced phase, and chopping around through there. You can see it's now starting to push out. So that's a good example of what this one might expect once it gets up into the upper areas up here. It's generally an area of volatility as it tests the initial top of the range. So again, secondary earnings reaction back in October there was good, and we're now getting another strong earnings reaction here today. So INFA continuing higher in stage 2. Now, what is it? Moving 78 to 79% above the initial stage 2 breakout point at this point.